Good afternoon, ladies and gentlemen, and welcome to the BANGO PLC investor presentation. Throughout this recorded presentation, investors will be in listen-only mode. Questions are encouraged and can be submitted at any time via the Q&A tab that's just situated on the right-hand corner of your screen. Please just simply type in your questions at any time and press send. The company may not be in a position to answer every question it receives during the meeting itself. However, all questions will be reviewed, with responses published on the Investor Meet Company platform where it is appropriate to do so. Before we begin, I would like to submit the following poll, and as usual, if you could give that your kind attention, I'm sure the company would be most grateful. I'd now like to hand you over to CEO Paul Arby. Good afternoon, sir.
Good afternoon, everybody, and thank you, everybody, for their time this afternoon. I know we set this up on relatively short notice, so really do appreciate you joining us to find out a little bit more about the exciting news that we published this morning. I'm joined here by Matt Garner, our CFO, Anil Malhotra, our CMO and co-founder, and Rebecca Jameson, Head of Investor Relations. And together, we'll basically do a relatively brief presentation to give you a bit more color on the RNS that we issued this morning, leaving as much time as possible for, I'm sure, the questions that you have. So I'd encourage you to please engage with the Q&A panel and ask questions as we go, and we'll do our best to address those either as we go through or at the end of the presentation. So as you were seeing this morning, we made an RNS that basically talked about two significant developments for the business. The firstly is that we acquired the global payments business of NTT Docomo. This traded previously as Docomo Digital. If you've been following carrier billing for a while, that's a name you will be familiar with. It's a company we've competed with for many years, which we've now acquired to really solidify our position as a leader in this alternative payments market. The second element was that we signed a multi-year agreement with NTT Docomo. So NTT Docomo, the largest operator in Japan, which itself is one of the largest carrier billing markets in the world, and the previous parent company and shareholder of Docomo Digital Payments. We've signed a multi-year agreement to basically be their preferred partner for the integrator of all their carrier billing and wallet services for all the global merchants as they look to add those to their payments portfolio. I'll talk a little bit about that as we go through, but those are the two key elements of the announcement this morning, and both of which combined with really accelerate our growth by over 2 years. This is a significant step forward for us as a company. This really is one of those game-changing moments which puts us in a very different position. The agreement with NTT Docomo in particular is very exciting. It's a company we already have a relationship with. We already process a lot of the carrier billing physical goods for Amazon through NTT Docomo. And this brings all their other merchants, so the various app stores, Shopify, so extending a bit more into the physical goods market, but also companies like Jetstar, who is an airline ticket. So you can now buy airline tickets and charge it to your mobile phone bill via the BANGO platform. This really increases the scale as a platform for global merchants. We've always been focused on merchants who want to expand globally, and this really gives us significant more scale for those merchants, while at the same time bringing in additional merchants onto the platform. As we go through, the feedback we've had from customers and partners and merchants so far has been very positive, and we really hope that you recognize the value, because for us this is one of those deals that delivers significantly increased shareholder value immediately, and a value that only increases over time as we work through the integration process and manage some of the cost synergies. We have a very complementary operator and customer base. We'll see a bit more about that later. And then once we've migrated all the routes onto the BANGO platform, we'll be able to operate those at our typical very high margin. So with most of that incremental revenue dropping straight down into the bottom line. And if we look just a little bit of numbers, we're talking about an additional $3.5 billion of end user spend. So remember, last year we reported just over just over 4 billion. So that almost doubles us, not quite. An additional 16 million of revenue per year. We'll recognize about 5 in the period that is left this year. Then in 2023, when we have a full year, should be around the $16 million mark. We paid a total consideration of 4 million euros. That was funded using our existing cash resource. We acquired the company with 3.1 million of cash remaining, making the net consideration just around €1 million. We're expecting synergy savings, so these are cost synergies of around $21 million per year by 2023. We'll talk a little bit more about that as we go through the integration strategy. And this will be earnings accretive next year and materially accretive in 2024 onwards, as we realize the full value of those synergy savings and complete the migration of everybody onto the Bango platform. We get asked a lot in these sessions and with other investors about M&A and what's our M&A strategy. And our answer has always been the same, is we will look for opportunities to accelerate the virtuous circle. We will not just acquire vertical or parallel businesses that just drive additional revenue growth, which are not related to the core strategy of the business. We have enough organic opportunity, as we've spoken about many times before, in terms of the growth potential. But this opportunity really was a way to turbocharge that virtuous circle, bringing more merchants, more operators onto the virtuous circle, that additional 3.5 billion of end user spend, which adds to our organic, 4 billion and growing, gives us that increased size of pool of payment data that we can use to generate the insights from in the Bango Audiences business to help those same merchants better target their marketing, find paying users using our unique purchase behavior targeting technology. That in turn drives more payments, and the Bango virtuous circle continues to spin. So this acquisition and this deal is really a turbocharge for the virtuous circle that we've talked about before, bringing significantly more payment data, significantly more merchants, and to allow us to generate even more insights and drive our growth even faster than we have been doing previously in what is a particularly exciting market, in particular with the NTT Docomo business in Japan. So what does this acquisition bring to Bango? So all the Bango merchants that are already connected into the Bango platform now have access to almost 2 billion more users and a whole host of additional telcos that they can use to offer their services and find more users via the Bango platform. It gives us deeper connection into all the major app stores. We more or less double the number of Google and Amazon routes that we had previously between ourselves and NTT and Docomo Digital. We were then, in the top two for both of those merchants. That now really solidifies our position as a leader. It adds a whole host of new payment partners. So telcos are more than 60 telcos added, some of which we already have a relationship with, some of which are new. Over 30 new merchant customers, excitingly more exposure to physical goods. So expanding the work we've already done with Amazon, but now into the Shopify ecosystem. And that long-term strategic partnership with NTT Docomo, the largest operator in the largest carrier billing market in the world. It really deepens our presence in all 40 countries that the business operates in, but in particular really brings a lot of strength in Latin America, in Europe, which complements the strength that we both had in Asia, and then in Bango in particular we had in North America. So a really very complementary footprint, really solidifies our position as a global leader in this market, while at the same time bringing that additional payment data that we can monetize through Bango Audiences. You can see, we look at the customer base. What you see is there are some customers that are unique to one of us, and there are a lot of customers that are common in the middle. And so there's advantage of this, so where we just have an operator that's connected to the Bango platform. They now get access to all the new merchants that we bring in through the connection and the acquisition of Docomo Digital. And likewise, the merchants that we have connected into the Bango platform get access to all the new and unique telcos that are connected into the Docomo Digital platform. And then you have the period in the middle where we have overlap, where we really strengthen our position with some of the leaders in the marketplace. I mentioned Google and Amazon earlier from a merchant perspective, and the similar is true with operators, where we both had connections into NTT Docomo, SoftBank, and Vodafone. And now by combining the two businesses, we're in a really strong position with those operators to really help both the operators and the merchants expand and grow their business. So a nice combination of new customers, new merchants, new operators, but also a lot in common where we really strengthen our leadership position and relationship with those particular companies. Just to look a little bit about the strategic rationale for the deal. Obviously, we're consolidating with a competitor in the market. We've competed with Docomo Digital for many years, so this consolidates and removes a competitor from that market. It importantly gives us increased scale. I talked before about the geographical synergies and the overlap between the different markets. There's obviously significant cost synergies to be gained, and that's from once the platform, we migrate everybody from the Docomo Digital platform over to the Bango platform. It's obviously removing of overlapping features, redundant G&A costs, etc. And it provides an additional pool of talent, which is really important. So we're Bango, we've always been growing, and we've continuously grown, and we've brought on, and as you'll see if you monitor the job board on our website, we're always looking for new talent. And this immediately brings a large portion of talent who are very, very knowledgeable, very familiar with the industry, very well known in the industry, to help us accelerate our organic growth even further. More data for Bango audiences, which really sort of drives that sort of growth acceleration. So we really expect to see an acceleration in our growth moving forward with this. The numbers we've given, that sort of 16 million next year and then the 5 million revenue this year, really don't include any revenue synergies. We've not included any acceleration of the Bango audiences business that this increased pool of data will give. We've not included any acceleration of our organic growth that we think we might get because of having this increased scale and this removal of the competition in the market. So really exciting opportunities ahead of us beyond the numbers that you will have seen in the RNS this morning. A big part of this is all about migrating and achieving those cost synergies by migrating all those routes onto the Bango platform. That's something we've done many times before. Last time actually when the company acquired Build to Mobile, probably back in 2016. More recently in the past year or so, where we migrated a number of routes from another integrator who had decided to sort of exit that particular market. And in all of those, we know exactly how to bring in and migrate merchants and migrate operators over to the Bango platform without any technical interruption, and do that in the most cost-effective and rapid manner. And don't forget that because of that commonality of the customers, a lot of these people are already connected. So we don't have to form a new connection with Google, for example, because we already have that connection with Google. And that's where that sort of complementary customer base, coupled with the knowledge and experience we have in migrating routes, really makes execution of the cost synergies something that we can look to deploy over the next sort of 12 to 18 months. So just in numbers, some of these we covered earlier. So end user spend, we'll add about $3.5 billion of end user spend a year. You add that into the 4 that we did last year and growing, and you can see we're very rapidly approaching double-digit billions of dollars in terms of the transactions we process through the platform, and that's all really valuable data that we can use within the Bango Audiences business. Immediate revenue this year of 5 million above any consensus you see in the market. So this is 5 million incremental revenue on any of the consensus numbers you look in the market. And when we run that for a full year, we're talking around the $16 million route. And I say that's without any of those revenue synergies that we get from the increased scale and the increased data pool that we have available. From a profitability perspective, we expect to see a reduction in our EBITDA. So this is not making our EBITDA negative this year. This is just a reduction on the consensus forecasts of about 4 million. That's obviously due to the increased cost base that we've taken on as part of this acquisition. We think that will be slightly positive in 2023 when we have a full year and we've executed on some of the cost synergies. And by 2024, we should be generating around $10 million a year. So you really see that $16 million of revenue dropping straight to the bottom line with 10 million of EBITDA. From a net profit perspective, we will this year see a loss of anywhere between 30 to 35 million dollars as we look to write down the intangibles and the fixed assets from the company that we've acquired, and we'll also take a reserve for the restructuring that we'll do partly this year and partly next year. So most of that 30 to 35 are really exceptionals, non-cash items. The one exception obviously being the restructuring, which will be phased over the next sort of 12 to 18 months. And then once you get forward to 2024, because we'll be fully expensing all the platform, etc., all that EBITDA will drop straight to the bottom line, so that we can see we'll see that EBITDA drop straight to the bottom, because there will be no depreciation or amortization, because we will not be capitalizing any of the assets from this acquisition. In fact, we'll be writing them off. I mentioned earlier, we sort of paid a gross consideration of 4 million euros, which after you take in the cash left in the business made the net consideration just less than 1 million euros. And I think one of the important points here is around, why were NTT Docomo interested in this transaction? And for them, this transaction was not one to generate cash that could sit in their bank account. This was to find a strategic partner for them that could help them grow their payments business. The payments business is very important for NTT Docomo in Japan, For a number of years now, they've been trying to build the industry standard platform through the Docomo Digital subsidiary, but I think started to realize that actually it's hard to do that when you're part of an operator, and really an independent platform and a partnership with Bango, who's obviously been the fastest growing company in this alternative payments market, really made sense in the way of accelerating that drive towards that common platform that allows global merchants to access customers in Japan as well as in other parts of the world. So for them, this was not really a sort of a sale for a cash perspective. It was a sale to find a strategic partner that could build that common platform to allow them to integrate and expand their payments business in Japan and beyond. Synergy savings, I talked a little bit about earlier. That's obviously a combination of reduction of sort of admin overheads, the savings we get from migrating the platforms, as well as obviously some restructuring once we've taken into account the organic hiring that we were doing as part of Bango. There are currently around sort of 232 employees in Docomo Digital, spread in various parts of the world. They're all now Bango employees, are in a process of being integrated and reorganized to align with the Bango operating model. And it brings around 60 operators and 30 merchants into the Bango circle. And you saw some before, a good mixture of some new and some old. As we mentioned, this is really about accelerating growth. We're bringing more telcos. So those telcos have access to all the Bango merchants already connected into the Bango platform. We're bringing more merchants onto the platform who have access to all the telcos that are already connected. It gives us more scale with key merchants like Amazon, Google, but also with operators like Vodafone. So it really solidifies our position as a leader in this market with some of the largest companies in the world. And importantly, it gives more data. So it really gives us more end user spend to generate those payment insights and to monetize through the Bango Audiences business. And we've talked on calls like this before about, and the graph you see on the right-hand side, where we talk about being on a journey from tens of millions to hundreds of millions of revenue. We really see this acquisition and the long-term partnership with NTT Docomo as a way of accelerating ourselves at least 2 years down that path. And you can see that purely from a numbers perspective. But when you look at the strategic benefits we get from increased scale, it's easy to see how our journey on that path to hundreds of millions has been accelerated. So in summary, a lot of this deal is about trust. The trust that NTT Docomo have in Bango, and not only from the work we've done over the past years with the Amazon physical goods carrier billing in Japan, but also the trust they place us in the future, not only to maintain their existing payments business, but to actually grow it and to become that dominant platform in the industry. It's very easy to see the platform effect where new merchants and new telcos accelerate the scale of the platform, each benefiting from that increased connectivity. So that the entire strategy of the Bango platform is you connect once and you get access to everybody on the other side. When we do that, it's very high margin. And so, we can, once these routes are migrated, we operate in these at, close to 95% gross profit and really boosts the volume of payment data that we have to accelerate. So this acquisition is exactly aligned with that virtuous circle and really turbocharges that virtuous circle where we collect payment data, turn it into insights that we can monetize through Bango Audience, which in turn generate more payments data. So it really accelerates our position as leader in this market. And I say we see this as something that accelerates our position by around 2 years. So with that, I'll stop and we'll pause for Q&A.
Paul, that's great, and thank you very much indeed for your presentation this afternoon. Ladies and gentlemen, please do continue to submit your questions just by using the Q&A tab that's situated on the top right-hand corner of your screen. But just while the team takes a few moments to review those questions that were submitted already, I would like to remind you that a recording of this presentation, along with a copy of the slides and the published Q&A, can be accessed via your investor dashboard. Paul, Matthew, Anil, as you can see, we have received a number of questions throughout today's presentation. So thank you to all of those on the call for taking the time to submit their questions. Rebecca, if I could please just hand back to you to run through that Q&A tab and share the session with the team, and then I'll pick up from you at the end. Thank you.
Thank you. Yeah, there were a couple of questions on sort of NTT Docomo's reason for selling, which I think Paul has covered since they were submitted. But if you do need any follow-up information or anything else, then do send through another question. There's a question here on the integration schedule with the estimated sort of 30 to 35 million cost, which they believe implies it's perhaps a costly or complicated process, and whether we could provide comment on how much planning has gone into identifying the steps involved, and how conservative the schedule and/or costs are with the integration, just trying to get a handle on sort of potential risk for time and cost overrun.
Yeah, let me talk a little bit about it. So firstly, these sorts of migrations, as I mentioned a bit during the presentation, is something we've done before. We did that when we acquired Built2Mobile back in 2016. We've done that actually this year with an operator where we migrated a number of their routes off their platform onto the Bango platform, always zero downtime. So that level of integration and that level of migration is something we've done before. As a management team, all of us have lived through various M&A processes on both sides of that equation. So it's something we're all extensively familiar with as a management team. So absolutely, we've done it before. We're estimating sort of 18 to 24 months. If that's something we can do quicker, we will look to do that. And that's why one of the reasons we have that sort of NHN potential for an NHN loan that we talked about in the RNS, because if we see the opportunity to invest more to accelerate some of that, then absolutely we will do it. And then the other thing I mentioned is in that 30 to 35, as I mentioned during the presentation, a lot of those are really sort of fixed and an intangible write-off. So they're not cash impacting. It's not really a cost. It's more of an accounting idiosyncrasy, I would think. Matt, is that a good way of describing it?
I think it's where the technology is going to be changed across to the Bango platform. The investment that's been taken into the Docomo platform will reduce in value. So we'll take that opportunity to write that one off straight away.
A question on sort of why sort of if Docomo Digital has had, or the impression that Docomo Digital has had maybe a slightly turbulent financial history, and what we think we can do differently, or why we could change that under Bango's ownership.
Yeah, it's a good question. I think there's a couple of elements to that. I think firstly, we sort of approached, although we've been competing for a while, we approached the business in very different ways. In Bango, our strategy was always there's this common platform. You connect once, and you get access to on everybody on the other side. And in Docomo Digital, the approach they took was very much to sort of silo integration. So you had lots of sort of point-to-point integrations, and that makes it costly. At the start of carrier billing, when there were single integrations, there was absolutely a rationale for doing that. As look to add more and more merchants into the platform, and those merchants won't get access to more telcos, that just becomes very, very complex. So one of the key rationales for this is migrating everybody onto the Bango platform, because then you get that platform impact and everybody connected into the Bango circle that really benefits without us having to do more work. And so it's a slightly different sort of architectural approach. I think also it's very difficult. There are multiple operators who have tried to sort of run businesses and run subsidiaries and sell to other telcos. That generally always is complex. It's not always straightforward that there's that natural cooperation between telcos. That means they want to buy from a company that's owned by another telco. And I think NTT sort of recognized that. And as I said earlier, they were basically, trying to build this common platform and recognize that actually that was best done independently. And as one of the fastest growing companies in the market, clearly Bango was a clear choice to form that strategic partnership with, to build that single platform so they could accelerate their own growth.
Can I just pick up on Ian W.'s, just a continuing question on the write-downs? Yes, Ian, those downward revisions are related to the Docomo business and not related to the Bango intangibles and fixed asset elements.
Maybe another one for you. The synergies are $21 million for 2024. Is that included in the $10 million of incremental EBITDA for 2024 or in addition?
That's the basis. Obviously, when they come into play, you'll have those will be implemented across the period. So if you're looking at a monthly run rate from when we've taken Docomo over now to the end of 2023, that's where we're guiding for our 21 million of synergies. So that then will really see full impact when it goes on to 2024.
A question on the customers we've acquired that were both Bango and Docomo customers. A few of them were large players and I guess were previously using two platforms. Is there a risk that they would simply transfer the business that we've acquired to another platform?
No, I think the answer is no. I think what we've shown in this business is, firstly, the business is highly sticky. You don't get routes moving, unnecessarily. It's a very sticky business. And I think with all of these companies, we have a very strong reputation. And actually what it does, it sort of really solidifies our position. So we see, I guess, only potential upside from that because it really, puts us in a very leadership position in this market. And we've built a long-term element of trust with some of the largest companies in the world. and that trust is something we'll maintain, that we think will allow us to grow our business moving forward.
Do you expect that this transaction would have any impact on our AIM listing or trigger a move to the main market?
No, I think this transaction, I think, is independent of anything. That what this transaction does is accelerate our growth, right, and it pushes us forward 2 years. So in terms of a market impact, I think you probably see from the various analyst notes this morning, people are talking about a significantly higher target price than they were previously. So in terms of a stock market impact, the market seems to have reacted well today, and we would hope that continues as we sort of deliver on these cost synergies, but also accelerate our growth from having that increased scale.
Can you talk a bit about the geographic breakdown of the Docomo Digital revenue or routes?
We do a little bit. I mean, we don't do a great deal of detail on geographic breakdown on our own numbers, as people on call will know. And we have commented anecdotally about setting aside Japan. Obviously, the deal we've done with NTT Docomo in Japan gives us a very significant hold on that market for carrier billing. Docomo Digital had good business relationships in regions like Latin America, which were very complementary to the business we have in Latin America. So that bringing those two pieces together gives us a lot of presence in Latin America that we didn't have this time yesterday. And similarly, actually, across Europe, they had good presence in certain markets in Central Europe where we had less of a presence. So what it's done in many respects actually is filled in the gaps, such as they were in Bango's coverage. And so we're now really comprehensive across every region with very deep relationships with all of the big players, all the big merchants, and all of the big operators. So it's a very synergistic deal for a number of reasons, including that complementary market coverage.
Thank you. Is there any likelihood that Bango would need to raise additional capital?
I think, as we said in the RNS, we funded this entirely from our own cash reserves. We have the option of some 10 million of additional financing, which we will choose to use if we believe that by spending that money we could accelerate some of these cost synergies. It just gives us that additional buffer. You will also just talked in the RNS about our cash flow position is materially improved due to some contracts that we have from the platform business, where the payment terms really benefit us with customers paying a couple of years in advance. So that really gives us that safe buffer to allow us to execute on that. So I think for this particular acquisition at this time, we have no plans to do a particular fundraise, because we just at the current time just do not believe it's necessary.
A question on whether there are any plans to integrate cryptocurrencies onto the Bango platform.
So in terms of selecting specific cryptocurrencies to support on the Bango platform, we haven't got any immediate plans that we talked about. It is worth commenting, as we often do when we talk about the architecture of the Bango platform, that it's built. It's offensively currency independent, it's payment method independent. So actually, we can integrate almost any payment method and therefore any kind of currency into the Bango platform. So it's actually imminently possible to support cryptocurrencies. But actually, there's just been no demand for it from our merchants, and that will drive our behaviour, as if we either anticipate significant market take-up of cryptocurrencies by end consumers and/or demand from our merchant partners, of which there's been very little so far. So I think the answer to your question, Andrew, is that we certainly can support cryptocurrencies, but there's no demand for it at the moment. Do you want me to pick up on the acquisition question? Yeah, so questions come through a couple of times about which we covered the reasons why we were very keen to acquire the Docomo Digital business. And in Paul's presentation, we briefly covered the rationale for why Docomo chose to sell it to us. So I think there's a couple of questions about why was it that we bought that business rather than, say, NTT Docomo buying us. And it really goes back to why did NTT Docomo want to sell the business in the first place? And they've reached a point with that business where they're thinking about how they could grow it in the future. They realise that the opportunity to grow it into a truly global platform would be much better if the business could be presented as an independent platform. Of course, Docomo Digital was entirely owned by a mobile network operator, i.e. NTT Docomo. And it was they believed, and we agree with them, that it would be hard to create a truly global scale platform that was owned by one operator. And so when they rationalised that strategically, they said, okay, well, how do we make this into an independent platform? And they looked to us for the opportunity to do that. I've just seen another question pop up, which is timely. As far as we know, they did indeed look at other potential homes for that business. But by the time they approached us earlier this year, they were pretty clear in their minds that Bango was the right place for that business to go. And so that's how we've ended up with it. Remember, if you think about the detail of Bango's business, we already do the Amazon retail carrier billing business in Japan, and therefore NTT Docomo is already a partner of ours and has been for 4 or 5 years for that business. So we have a pre-existing relationship with them, and I'm sure that's a contributory factor, the fact that's been a very positive, very constructive relationship with NTT Docomo in order to deliver the Amazon retail payments business. And so, yes, by the time they approached us, it was clear that they believed that Bango was the right platform to scale this technology into a truly global opportunity.
That's it for the questions we've had so far.
Rebecca, if I may just jump back in there, and Paul, Matthew, Anu as well, thank you very much indeed for taking the time to address all those questions that came in from investors this afternoon. Of course, if there are any further questions that are submitted today, we'll make these available to you immediately after the presentation has ended for you to review. And ladies and gentlemen, we'll publish all those responses where it's appropriate to do so on the Investor Meet Company platform. Paul, perhaps before redirecting those on the call to provide you with their feedback, which I know is particularly important to yourself and the team, if I could please just ask you for a few closing comments just to wrap up with, that'd be great.
Yeah, sure. And once again, thanks everybody for joining at the last minute. Please, if there are questions we didn't answer, please use investors@bango.com to get in touch. We really like to engage, and thanks to everybody who's submitting questions through the day to that email as well. And thanks to everybody who asked questions on this particular call. We hope you're as excited about this opportunity as we have. As we talked about, for us, this is one of those once in a lifetime deals. This really is a game changer. It accelerates us forward by at least 2 years. Builds a long-term partnership with the largest operator in the largest carrier billing market in the world, and gives us an additional $3.5 billion of end-user spend to help monetize through Bango audiences and help to accelerate the growth of that business in addition to the payments business. So really, really significant event. We're very excited about the potential in the future, and we'll keep you updated as the integration progresses. We have our interim results in mid-September, and we'll provide you more context then. But in the meantime, if you have questions, then please do get in touch. And thanks again for joining, and thanks for your continued support.
Paul, that's great. And Matthew, Anu, and Rebecca as well, thank you very much indeed for taking the time to update investors today. Could I please ask investors not to close this session, as you'll now be automatically redirected for the opportunity to provide your feedback in order that the management team can better understand your views and expectations. This will only take a few moments to complete, but I'm sure will be greatly valued by the company. On behalf of the management team of Bango PLC, we would like to thank you for attending today's presentation. That now concludes today's session, so good afternoon to you all.